Hello and welcome to another update video about ADA. We start on the larger time frame here on the ADA chart, and we take a look at the chart from an Elliott wave point of view, which is a sentiment-based market analysis method. If you want to learn more about that, make sure that you subscribe for free to this channel. We take a look at different cryptocurrency charts every single day, and we'll take a look at the charts always from an Elliott wave point of view. And I always try to explain what my thought process is, so you get a good idea of the patterns and how I measure targets and so on. This is the daily time frame for ADA, and as per previous updates, I'm still watching for one more high in this cycle. That's not a guarantee. I see the move as very weak. Okay, so what happened this week was a break below support. This is not an invalidation of the pattern. So the pattern we've been tracking is still valid, especially because the break below support was not a sustained, not a decisive break. The buyers rather stepped in, but the move happened so quickly that it moved down all the way to 51 cents, even though 64 cents is the key support. That should have held. But when we have these events where the markets are moving very, very rapidly, and we have that every few months in the altcoin sector, then sometimes support levels are broken, but not on a sustained basis. The market recovers and is basically back in the previous range. Now, this, however, is very deep for a way forward, so of course we have to consider alternative scenarios, which we have to do, which we're doing. So, for example, any break below the Monday low, which is at 51 cents, would likely lead to a test of this area between 28 cents and 36 cents, which means it's high risk, because we could test that area, and support is then at 28.9 cents, which is far away from the current price. But first of all, we have to see if the market can hold above the Monday low, and we have to watch the smaller time frame chart to get some clarity about the latest structures and movements, which we will do in a minute. What I wanted to share here with you is that it's still on the table to get one more high. And if we get one more high, then the next upside Fibonacci resistance levels that we have to watch are, from a Fibonacci point of view, are $1.42, $1.72, and $2.36. These are the next levels to watch. But careful, I'm only watching for one more high. I don't expect new all-time highs in this particular rally. Now, I could be wrong about that, but so far, my cautious perspective, I think, has proven to be correct. I'm still looking for higher, yes, but we are in the late stages of a bullish cycle. I explain that every day in the Bitcoin videos. So, also in terms of next resistances, obviously the market will need to break above this January swing high, which formed around $1.15, and the December high around $1.34 to unlock prices in the region between $1.72 and $2.36. Now let's take a look at the shorter time frame. Here we can see a reaction to the Monday low, when the price moved down rapidly but recovered. I'm currently tracking an upside reversal pattern. It is low confidence for various reasons, including the Bitcoin chart, which doesn't give me a very convincing upside reversal pattern, but I'm leaning towards the bullish scenario. We just need to have a little bit of patience. So the idea is that the move up could represent a so-called wave one, which is normally the first step of such an upside reversal pattern. Another reason why I'm leaning towards that is because the move to the downside looks corrective. You see the difference in momentum, a very, very rapid recovery, and this move down is overlapping, corrective, slow, and this here looks like a triangle, what occurred here between the 4th of February and the 6th of February. It looks like a triangle, and we know that typically the next move after a triangle is the last one. So in the context of a correction, we know that this here could have been an A wave, a B, and the C, but the C wave is a 5-wave move, so 1, 2, 3, we might get another 4, 5. Target here for the C wave is the 100% extension at 66 cents. Below that level, we've got 65, 61, and 56 cents as support. Below 56 cents, I don't see any clear bullish pathway from here on the smaller time frame. Most recently, the price retested the trend line from below, and this was confirmation that we'll go a little bit lower. I would pay attention to these levels that I mentioned, and it takes a break above the first green line at 76 cents to indicate that a low is in place. That would need to be further confirmed with a break above 82 cents. So that's just a quick update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.